Good morning, everybody. Happy Wednesday, hump day. Today is Wednesday, April 5th. Just had the market come down about a dollar or so after we had the ADP non-farm employment change coming in much lower than expected. So finally, bad news is bad news. So we go over to the economic calendar. We can look at the estimates, the previous, and the actual reported. So the actual was 145,000 jobs added this month versus 200,000 expected. And this is down from 261,000 jobs added the month before. So significant decline in the number of jobs added. So we're likely going to get a higher unemployment percentage reading Friday. But the markets will be closed on Friday for observing Good Friday. Tomorrow, though, we have initial jobless claims, continuing jobless claims. So if this data continues to come in worse and worse and worse, that is sparking the recession fears. What you're going to see is people piling into bonds, TLT, for example, going up from 105 to currently 108. And you're going to see the Treasury yield dropping. The 10-year is down to 3.3, which is about the bottom end of the range that it's been in the past month. So if we end up cracking that, that would be pretty rough for the market. But this is down from 3.34 it closed yesterday. And you'll see gold rallying even more. Currently, it's at 188.46 for GLD, the gold ETF. And if we continue to see that pop, if we're seeing the dollar coming down at 101.60 right now, and if we're seeing bonds going up, that is recession fears, and that is going to drag the markets down, especially the higher risk stocks. So you're probably going to see IWM down the most today, 0.5% currently, 0.6% almost. QQQ down 0.3%. This one's been up the most over the past month, so this has more to give up. And then SPY is down 0.1%, and the Dow is actually slightly positive 0.1%. Good morning, Donald. Good morning, Being Human. Good morning, Kamala. Good morning, Irfan. Happy Wednesday to everybody. And if we head on over to my Robinhood, I ended up opening a 409, 408 put debit spread that's expiring for today. Currently, SPY is trading at 408.11, and these are going for 54 cents a piece. So it does still seem like the markets anticipate a rise this morning. Right now, we're at 51 for the RSI, so starting to look bullish here, potentially. And the close yesterday was, let's see, we had a pretty decent rise into close yesterday, and the close came in at 408.89. So we're down about 60, 70 cents from close of yesterday, or about 0.1%. My guess today is probably going to be bearish, but it could already be priced in to some degree because we already had the bad unemployment or the bad JOLTS job report yesterday, and then the ADP was just kind of a confirmation of that, I would say. So we might end up trading flat, or my guess will probably come down. IWM is definitely bleeding, though, down 0.7%. Again, this is the higher risk ETF being concentrated in small caps. And then QQQ down 0.3%, but it seems to be catching some supports at the lows for the last couple of days at like 317.75. Almost tempted to take a QQQ put debit spread like I did yesterday, but I've already got this bearish trade for SPY at under 408 today, so I think I'll be okay with that for right now. Good morning, Peter. Welcome. Yeah, we're retesting that low with QQQ at 317.75 right now. I think that QQQ has a decent way to sell off, just again because this one has been up the most over the past month. So it has more to give up in that regard. I do have a Tesla call debit spread that I'll probably close out of along with the SPY trade. I'm sure this is down pretty heavily, down to 267 for the loss on this. So this will be saving this position from max loss. I opened 3 of them for 120, and now they're going for about 25 cents a piece. I'll try to get out a little bit higher at 26, maybe 27 if I'm lucky, but my guess, Nasdaq's going to pull back. That's going to bring down Tesla with it, and I don't think that Tesla can make its way back up to 200 by tomorrow. So this trade is going south. It doesn't look like I got filled at 26, so I'm going to have to review the order to 25. Hopefully it doesn't fall too much quicker. But now the Nasdaq is down 0.5%. SPY is down 0.2%. IWM almost down 1% already. So another pretty nasty sell-off today. All right. So we're out of that trade. Could have probably hedged it with the QQQ trade, put debit spread, but I'd rather just get out of the loss instead of losing everything. Closing options alert. Premium just cut losses for the 197.50/200. Tesla put debit spread that's expiring tomorrow, which is the 6th, and I got out at 25 each. I originally purchased those at 120. Let's see. Originally opened 3 at 120, so 360 minus 75 would be a 285 loss on that trade. All right. And Tesla's down to 188.30, down to a new 2-day low. SPY's still trading at 408, and then QQQ down about that 0.5%. You're seeing Dow kind of holding up the SPY as of right now. The VIX is at 1966, so this isn't headed much higher. So you're getting a balance between the Dow, which is a bunch of industrial staples, which typically do a little bit better in a recession. At least they hold up. And then the NASDAQ, obviously, down 0.5%, leading the downside. So you're getting a little bit of a balance for SPY between those two. All right, these are up by 40 at the moment. I opened them at 48. They're going for 51. I opened 8 of them. But right now we're just getting a push and pull from the Dow and QQQ. Let's check the other big names. Nvidia is down to 268, finally below 270. It's been a while since we've seen that number. About a week or so. Let's see what else. Apple is down by 0.4%. So these stocks that are trading basically at all-time highs, I feel like are at the greatest risk. So Apple, Nvidia, what other names can we think of? Microsoft, not so much. It's not as high as those, but it is up there. Let's see. Meta has been doing pretty well, almost at the yearly high, so this has some ways to come down too. So all these mega cap companies, these trillion-dollar companies that have been doing so well since the beginning of the year, I think have a decent way to pull back. If the new narrative is recession, these companies aren't going to be doing so hot. Let's see if we have any other economic data coming out. We have non-manufacturing PMI coming out at 10 a.m. The manufacturing PMI was pretty rough the other day, but the markets didn't really pay attention to that. So I wonder if they'll start paying more attention to it now, given that the last one kind of went overlooked, and now this new jobs data is coming out. It might cause people to start actually looking into the data a bit more. So we'll see what happens at 10 a.m. Netflix is up a lot. Let's see. Netflix. Yeah, Netflix is almost at the yearly high too. And this one, I feel like they've reached their peak. Like Netflix has reached their market match or like their market. I don't think that they're going to continue to grow a ton. There's ways that they can monetize in a different way, like the way that they have an advertisement platform now. But I just don't think that it's much of a growth company anymore. But yeah, this one's almost at yearly highs going into a recession. Yeah, bad as bad for the market. Bad news is bad news. All right, so if we see a recovery for QQQ or IWM, that might be our cue to get out for the SPY trade. Because those are the ones that are dragging the market down, and then you have the Dow dragging it up at the moment. Tesla 190, 187, 50 put for tomorrow. Wait for a bounce, or is it a put credit spread? If you're waiting for it to bounce, that would work against you if it's a debit spread. But if it's a credit spread, I mean, there could be a bounce in store. With QQQ trading at the lows, you might get some bounce here. We already did a little bit at 317.38. But I think that all the names that have been doing well over the past month are probably going to give up some more of their gains with the incoming data that's been coming out being so bad compared to expectations. But I would keep watching like TNX, the 10-year treasury yield at 3.307 right now. Keep watching what the dollar is doing. The dollar is actually slightly recovered, 0.05% up today. but basically trading at the lows. So watch for the fundamentals. If those start to improve, if the yields and the dollar go up, that would be a slight reversal in sentiment from recession. But as of right now, it does seem like that is the narrative with the last couple of jobs data that we got. And then again, we have the unemployment rate coming out on Friday, but the markets are closed. So all right, the Qs is falling some more, 0.55. So yeah, this one's headed to a new low. So I don't know if I would want to wait for a bounce on Tesla and any of the tech trades right now. You could always hedge the position too. That's what I usually do. So if you have a bullish trade for like Tesla, you could take a bearish trade for QQQ to go along with that. So you can have it both ways. It'll mitigate your losses at least to some degree. Like assuming QQQ could go to like 317 by the end of the day or something like that, or tomorrow could hedge your bullish trade for Tesla, assuming that it's going to be above 190. That's how I would trade it at least. But I've already got a bearish position for SPY, so basically doing the same thing. Global composite PMI 52.3. Let's see. Versus 53.3, so a slight deterioration. And actually up from 50.1 as of the last reading. So that's a positive reading. You might see bond yields going up here in reaction to this. And the dollar might rise a bit. If that's a precursor to what's to come for the non-manufacturing PMI, which has some more weight to it, we might end up recovering some. And then services PMI actually was lower than expected, 52.6 versus 53.8, and up from 50.6 as of the last reading. So I think if we do get a reversal, this is probably where it's going to come. But again, I would be watching QQQ. That's leading the downside at the moment, 0.6%. IWM is recovering slightly. And then the Dow is up 0.3%, so that's gaining the most this morning. Yeah, the Qs doesn't seem to care for the PMI report. Down to that 317 low now. See where Tesla is now. 188, so definitely coming down 2%. Oh, I never checked Amazon earlier. I don't think Amazon's close to the highs, though. Not as close as the other stocks, if I remember right. Currently at 102.59 versus a yearly high at 168. So not even close compared to the other big names. All right. So we'll keep the economic calendar up for the 10 a.m. PMI report. Johnson & Johnson is doing well this morning. J&J up 3%. Let's see if there's any news for it. What's going on with their stock? Usually healthcare stocks will do better in a recession theme. So probably part of the reason as to why it's up today, but let's see. It's talking about a lawsuit that they were having with one of their subsidiaries. Company continues to believe that these claims are specious, and lack scientific merit. They went to bankruptcy court about it. And resolving this through proposed reorganization is equitable and more efficient, allows claimants to be compensated in a timely manner. Not really sure how that would be bullish news for it, but it is up 3% regardless. But yeah, if you see healthcare starting to pull back, you're going to see the Dow probably coming down. So what usually does well in a recession is healthcare, staples, so things that people can't go without. Kroger would be a good example. People can't go without groceries. Let's see. McDonald's, fast food would be doing well. This is up 0.75% today. Walmart, for example, people are still going to go to Walmart in a recession, probably even more so because they give discounts compared to other retailers. So that's why you're seeing the Dow up 0.4%, whereas Q's is down 0.6 at the moment. And then the stocks that wouldn't do well in a recession would be the ones that have been doing well for the past year. So tech, high growth names, they're going to see less growth in the future. When is the news coming out? 10 a.m. Next support for QQQ. Let's see. So you had that 317 level that I just bounced at. Below that, you're looking at 314 for the next support. But I don't know if we'll reach 314 by the end of the day. But yeah, SPY is starting to go up a little bit with Qs recovering from that 317 level. And the Dow leading the way up 0.4. So it does seem like we could get a bounce. We're above 50 for the RSI, so that's starting to look a little bit bullish. Kind of tempted to make a call credit spread, assuming it's going to stay below 410 if it's paying a good credit. SPY. Right now it's paying 21 cents. So it's not really a lot that you're getting for that. I would want like 25 to 30 cents, but it's not paying it yet. Probably not going to pay that until it's trading at like 409, my guess. If you extend the expiration date to tomorrow, though, you do get 34 cents for that. That actually might be a good trade. Let's see. Probably put down my usual risk of about 400. They're going for 32 right now. They did reduce that credit down from 34. I'm going to try to put in the order for 33 for 8 of them, assuming that SPY is going to be below 410 tomorrow. Got about 4 minutes until that PMI report comes out. All right, not getting filled for 33 here. All right, I got filled on 2 of them out of 6, 4 of them. Getting some partial fills. There we go. Now filled completely. So a new option. This will probably be a swing trade depending on how quickly we move today. Just opened a new SPY call credit spread expiring tomorrow. Tomorrow is the 6th, Thursday. And I got them at 33 each. 410. There we go. And then the next support level you have for SPY today, 406, 404.35. And then resistance at 410 level is what I'm looking at. And then 412.35. The 10-year and the dollar are recovering a little bit, though. So it seems like that PMI report was good enough to shake off at least some of the recession fears. And then gold is pulling back from 188.86 to 188.04 right now. Versus the dollar up 0.05%. Still trading at the lows, though. Hopefully we get a decent pullback for the Dow. That would lead SPY down, but Dow is just resilient for right now. Still holding Micron. No, I got rid of those a while ago. A few days ago. It is trading down to that price level that I chose, though. Down to 55 is what I was assuming. But let's see, Micron. I closed that trade, I think on Monday or Friday of last week. Yeah, March 31st. So Friday of last week is when I closed that. But I could have held that closer to max profit. All right, so now we got the PMI report out finally, 10 a.m. and SPY is dropping already on the report. Very volatile. ISM non-manufacturing PMI coming in at 51.2 versus 54.5, so significantly lower than what was expected and down from 55.1 as of the last reading. So that is a pretty significant pullback for the non-manufacturing PMI. Still above 50, which is positive, but that big of a miss and that big of a drawdown from last month could be negative for the market and add to the recession vibes that we're feeling. Let's see. Non-manufacturing employment came down 51.3 versus 54, 53 expected, and then new orders 52.2 versus 62.6. And then non-manufacturing PMI 51.2 versus 55 as a last reading, and 54.5 expected. So yeah, now you're seeing the Dow pulling back a little bit. So if that starts to come on back, then you'll see SPY come down to 408 and below. But right now you're just getting some volatility. A little bit of indecision so far on this. Went a little bit higher, went a little bit lower. Now it's just kind of trading in between. But my reading on that, I would say that's pretty bad. Not super bad for the market. So slightly bearish. And now you're seeing the 10-year dropping below 3.3. So that's a new low for the 10-year. Dollar index is down 0.16 to a new low. So yeah, you're definitely getting the recession vibes from this report. And then gold is almost to a new high here. Let's see what oil is up to. I dropped it out of my watch list by accident. Down 0.2%. So oil is still holding right now with the OPEC cut that they announced, artificially inflating the prices. But, you know, if we are going into a recession, oil would be a good short position at these $80 levels, I would think. Unless you get OPEC continuing to cut more and more and more. Then, obviously, supply and demand imbalance would lead the prices up for oil. All right. Now the SPY debit spreads are up. Trading at 55. They're going for a reasonable price now, at least. I opened 8 of them for 48. Let's see. And SPY's coming down to test the lows this morning at 407.80. So if we get a retest of those lows and we break them, we might end up making the new 2-day low. And that might be our way to get out of this trade, hopefully. And then the call credit spread that I opened right before the report is up $6 a spread right now. Yeah, I opened these at 33. Now they're going for 26. So this one I'll probably hold on to. But I'll try to get rid of these 409, 408 put debit spreads. Hopefully get them out at a good price. Right now, it just seems like they're kind of cheap at 60 cents. I would think with SPY trading at 407.70 that they would be trading for like 63, 64. But for some reason, puts as of right now are just cheap, even on the dailies. And then the calls, I haven't found any good cheap bullish positions to be in as of lately. So if y'all have any cheap bullish positions that you're looking at, I'd be happy to hedge with that, but I haven't been able to find much of anything good. But yeah, I opened 8 for 48. Going for 60 now. I'm going to try to let go of these above 65. But we're trading at that daily low. Came just below it. And now to get to the 2-day low, it's 407.24. So we'll see if we end up going below that. But the Dow is pulling back finally. Only up 0.2%. It was up 0.4%. So this is what's leading the markets to the downside, with IWM also down 1% and QQQ down 0.75% almost. Not really seeing much love for the VIX yet, though. Interesting enough, only up 3.5%. To 1970, we haven't cracked that $20 level. I would have expected us to crack the 20 level. But I do have some bias there with my 500 UVIXI shares. Grand Risings. Raised 5 children. Jeez. Yeah, she's been kind of fussy the last couple of days, but her sleep has been a little bit different. She just turned 2 months as of April 1st. So she's 2 months and 4 days, and she's getting used to her new swaddle that we gave her. It's been a interesting experience to be waking up every 3 hours with a newborn, to say the least. But gotta love the kid. She's absolutely adorable. Do I have Instagram? No, I do not. I don't know what to post on Instagram, honestly, so I don't have one. I do have Twitter. Let's see. I'll just type it in here. Twitter.com. That's my Twitter handle. Don't really post much on there anymore. Used to post a lot more, but let's see. Yeah, SPY's at 407.50. The Dow is down, or the Dow is still up. If the Dow starts to go negative, then I think we will get a real sell-off. But haven't seen that as of yet. I would think once the Dow goes negative, we might be down probably like 1% for SPY. But again, not seeing that just yet. We're seeing a little bit of some buying pressure for the Dow at around 334, 34. Oh, yeah. No, I don't offer any classes, so definitely a scam. Send me the handle for their Instagram, though. That way I can report it, at least. what's my opinion on buying a Leaps call for SPY and then selling cover calls weekly or monthly? It's a good way to bring down the cost of it by collecting the credits. The position itself, buying the Leaps call for it would be pretty dangerous, I would say, though. So you're taking on a lot of risk of SPY continuing to come down in the recession theme. So if that continues to play out, SPY would sink in the value for your option. You would be collecting credits to, cover some of those losses. But the credits would be smaller and smaller as SPY continues to come down. So I wouldn't be so opposed to doing the opposite with a put option. So buying a Leaps put and then selling puts against it might not be a bad idea, especially with SPY trading in the upper end of its range. It's been trading range bound for the better part of, basically the last year of trading, right? Between 381 and 418, considering you're closer to the 418 mark, I would want to be short and wait for it to come closer to 380 than be going long when it's closer to 418 right now. And I'm not super bearish on the market. I do think that we're just going to be trading in range bound for a long time until we actually get the recession, until shit starts to hit the fan in a major way. But I think until then, you're probably just going to trade in that 380 to 418 range. You're going to see some rallies, you're going to see some drops, and it's just going to play out over and over and over again. I would imagine that the odds for the Fed raising rates is probably coming down now, with the recession fears amplifying the last couple of days. Yeah, the only thing that I offer is through the Discord. And it's the premium Discord that you'll see. Let's see. Let me copy paste it. This is the only thing that I offer. Everything else is a scam. And if somebody tries to ask you to send some Bitcoin, don't do it. These are really cheap, man. Jeez. SPY's trading at 407.35, but these are only going for 65 cents a piece. Ugh, I hate getting shortchanged with these bearish positions. It's terrible. But yeah, this is the only thing that I offer. All right. Dow might be losing some support. So it looks like we're starting to head down. Everything else is already massively negative. IWM down to 173. Jesus Christ. That would have been a really good short position to take. It was trading at 180 just a few days ago. Qs is down to 317, a little bit below that, 0.73%. SPY is down 0.25% at 407.50. And then the Dow is just barely hanging on to 0.2% positive. What was the news that dropped us this morning? It was the PMI reports that we had. So it started with the, not the job openings, but The ADP non-farm employment change came in much lower than expected at 145,000, I think, versus 200,000. Yeah, 145 versus 200,000 expected. And this is down from 261,000. So a significant drop in the number of jobs added to the economy in the last month. So people are saying this could be recessionary. And then you had the ISM non-manufacturing PMI coming out this morning at 51.2, which is a drop from 55.1 as of the last reading. And the expected was 54.5. So a significant drop for non-manufacturing PMI. Which is an indicator, a forward-looking indicator of the economy and non-manufacturing. So they're expecting the economy to be doing worse than they did a month ago. So that's why you're getting the recession vibes that you are right now, with a 10-year down below 3.3. The dollar index, actually, it's still holding up, interesting enough. 0.03. It did hit the new low, but bounced right off of that. And then gold at 188.21. So the gold is pulling back too. So you're seeing some conflicting evidence with the dollar up, but the 10-year down. Let's see what the 2-year is doing. Haven't checked that this morning, but people are more likely to pile into the 2-year yields since they're paying a higher rate. 3.7%, so these are down 12 basis points from 3.82 as of close yesterday. So a significant drop for the 2-year Treasury yield, drop for the 10-year Treasury yield. So people are buying into bonds. That brings the yields down, and the reason why they're buying into bonds is a hedge for safety, basically. People expect a recession. What usually does well in a recession is bonds, gold, and then staples, industrial stocks. So that's why you're seeing Dow still holding positive 0.2% today. But it does seem to be pulling back. Airbnb down pretty bad. Oh, Airbnb. I want to check into Zillow. Zillow's been red hot. It's still trading about 40. I can't believe this stock. Jesus Christ. This is wild. Zillow's trading at 43 versus a high at 53. I feel like this is such an easy short position to take with the demand for housing coming down. I mean, Zillow's just going to be used less, and this company doesn't really make that much money. They're losing a lot of their cash balance, so I feel like this is an easy short position, but it hasn't been for the past, 6 months since October. It's just been rising. Even with a bad earnings down, with negative 21 cent earnings per share, it's still going up like crazy. But I feel like it's such an easy short position to take. Let's see. Zillow. I would want a long time till the expiration date, just because the stock has been, holding up really well, very irrationally. Buy 50 put for 1,300, 1,400 for a break even of 37. That's pretty good. But that is another $6 drop over 43. That's like 11%, so that's pretty substantial. But a break even below like 40 I think would be good. But if you're looking at a break even of 40, you're paying for the 60 put $2,000 for that. So that's too much risk for my taste. But yeah, I do think that Zillow has a ways to come down. Airbnb, like you said, is down significantly, 5% today. Jeez. But yeah, these high growth names, they're the ones that are going to be hit the worst in a recession just because they've been doing so well. Now, we're not having the easy money decade that we did before. So, Airbnb, a lot of the stocks in QQQ, and a lot of the smaller NASDAQ stocks are probably going to come down significantly. I'm almost tempted to make a Dow put credit spread just because it seems to hold up really well, even with this recession vibes. Let's see. I think the expiration date has to be for tomorrow. I don't think that they have daily expirations. Actually, no. Yeah, they have only the April 6th expiration. All right, so let's get some support levels for Dow. There's this gap right here with a high at 332, 332.81. So if we say it's going to stay above 333, you only get paid 12 cents. Oh, that's 50-cent spread. 22 cents for a $1 spread. To assume it'll stay above 333. It's an okay credit. If you go one strike price higher and assume that it's going to stay above 334, you only get paid 30 cents for that. Yeah. Like I was saying earlier, I just don't see any decent bullish positions that are cheap. This one, you're taking on 70 risk to make 30, assuming that it won't drop another 70 cents. It has been holding really well, even with the recession fears going on. But it did end up coming down to 333, so that would put us at risk of max loss. Staying above 50 RSI for the 5-minute chart, though. And SPY is coming back up because of it. Hello. Welcome. All right. If the Dow keeps holding up, don't think I can hold for this SPY trade much longer. If the expiration date was tomorrow, I'd be fine with it, but seems to be holding up pretty well right now. They're going for 52, 53 at the bid. Which I still feel like I'm getting cheated out on the price of these being low. All right, I'll try to put in my order for 53 3 for 8 of them. I bought them at 48. Or we could just wait for a pullback on the Dow to lead SPY down. Hard decision to make. But yeah, everything else is looking bearish. With a 10-year below 3.3. Gold up this morning. All right, these are going for 55 now. It's a reasonable price, but I would expect them to be going for 60 each. So I still don't feel like I'm getting paid for what they're worth. But markets are telling me otherwise, unfortunately. And they've got a mind of their own. All right, I'm just going to keep an eye on the Dow. See how that trades, and that's going to indicate which way SPY goes here. But yeah, right now the Dow is looking bullish. If we can break the bullish trend, SPY would fall, but we'll wait on it just a little bit longer. I want to at least get rid of these for 60 cents a piece. Hopefully higher, but depends on the Dow. All right, they're going for 55 at the bid now, so they're getting close. Getting pretty close here. All right. Let's watch how the Dow reacts here. If it breaks that low or not. Then we can place our order in. All right, they're going for 65 now. So glad that we waited. That bid ask is getting wide. 5 cents wide, 65 and 60. Well, 63 and 68. Gotta love Robinhood. But yeah, let's watch if it if the Dow cracks that low or not. And then we'll make our decision to exit or not. All right. Looks like we cracked that low. So hold it is. And then looking at the other indices, QQQ is down to 316.9%. The Dow is only up 0.1% now. And SPY is down 0.3%. And the IWM down 1.2% to 173 at the moment. So, seems like we could flush here. The Dow was the only thing that was holding the markets up. So this will cause a significant sell-off if it keeps on going lower. Starting to look bearish at 50 RSI. If it goes below 50, that would be the start to a bearish RSI cycle. MACD curling down and crossing, but that can always go back up. Let me auto zoom out. All right. Doesn't seem to want to dip below that 334.30 level, so probably just get out of these at 65. Now the Dow's coming back off of that low. Oh man, I just wish it would make a decisive action. That seemed like it would have been decisive with that bearish candle, but not yet. All right, I'll just get rid of these at 60, I guess. There we go. Out of that trade. At 60 a piece, I open them at 48. Closing options alert. Just took profits on the SPY. What was it? 408, 409. Put debit spread expiring today. Today's the 5th at 60 each. Originally opened 8 at 48 for a total of 384. Oh, what the heck? And closes for 480, so 96 profit. And I still got the call credit spreads for SPY 2 going on, assuming it's going to be below 410. It's trading at 407.50 right now, so pretty good chance that it stays below that 410 mark. But yeah, that's all the trades I got for y'all today. The Tesla trade that I took the L for, and then that SPY trade just took a W. And I will catch y'all tomorrow at 9:30. See everybody.